Everything you've been told about building wealth is a lie designed to keep you trapped in a dying system. If you're still buying stocks in 2026, you're not an investor. You're a dinosaur waiting for the asteroid. The stock market isn't going to crash because of a bad earnings report or a hike in interest rates. It's going to crash because it has become technologically obsolete. The liquidity that props up the S&P 500 is about to evaporate, not into thin air, but into a new, parallel digital reality. This is the final market crash, and it won't happen on Wall Street. It will happen within the code of Web3. For 400 years, the stock market has been the ultimate tool of the establishment. It was designed to pool capital for empires, but in the modern age, it has become a hall of mirrors. When you buy a stock on a traditional brokerage, you are participating in a grand illusion. You don't actually own the share. You own a beneficial interest in a digital entry held by a central depository called Seed & Company. You are 3 layers deep in a game of trust me, where the intermediaries, the brokers, the clearinghouses, and the central banks hold the keys to your vault. In the old world, this was the only way to play the game. In the Web3 world, this is a systemic risk that is about to be liquidated. We are currently witnessing the Great Liquidity Migration. Trillions of dollars are realizing that the legacy financial system is slow, expensive, and fundamentally insecure. The final crash isn't about a drop in value. It's about a mass exodus. Imagine a world where every asset, every piece of real estate, every private company, every bond, and every commodity is tokenized. Imagine that these tokens settle instantly, trade 24/7, and require zero middlemen. Why would anyone, from a retail investor to a sovereign wealth fund, choose to stay in a market that closes at 4 p.m. on a Friday and takes 2 days to settle a trade? They won't. And when the smart money leaves the room, the legacy market won't just dip, it will hollow out. The stock market is a legacy operating system running on hardware from the 1970s. It is held together by the glue of counterparty risk. Every time you buy a share, you are trusting that the broker is solvent, the exchange is honest, and the government won't freeze the pipes. Web3 replaces this fragile trust with mathematical truth. Through the use of real-world assets or RWAs, the very concept of a stock exchange is being rewritten. We are moving from paper equities to programmable ownership. When an asset becomes programmable, it gains a level of utility that a traditional stock can never match. A tokenized share of a company can be used as collateral in a decentralized lending protocol at 3 a.m. on a Sunday to generate yield instantly. A traditional stock sits in a brokerage account, dead and useless, until you decide to sell it. This is the difference between a static photograph and a living, breathing organism. This is why you must stop buying stocks. The institutional pivot has already begun. BlackRock, Fidelity, and the world's largest asset managers aren't just launching ETFs, they are building the institutional blockchain. They know that the current plumbing of Wall Street is leaking. They are preparing to migrate the world's wealth onto a ledger that they can't control, but one that offers them a level of efficiency that will save them billions in operational costs. But here is the part they won't tell you. When the migration hits its tipping point, the liquidity remaining in the traditional stock market will become toxic. As the volume moves to Web3, the bid-ask spreads on Wall Street will widen, volatility will explode, and the safe haven of the S&P 500 will turn into a liquidity trap. You will be holding the paper while the world moves to the protocol. The final crash will be triggered by a phenomenon I call liquidity vampirism. In the traditional world, capital is trapped. If you want to move money from your stock account to buy a house, it takes days or weeks. In Web3, capital is fluid. As more real-world assets move on-chain, the speed of money, the velocity of circulation, will accelerate to a point that the traditional banking system cannot handle. The legacy market is a slow-moving pond. Web3 is a high-pressure fire hose. When the fire hose turns on, it will suck the water out of the pond until nothing but mud is left. This is the inevitable conclusion of the digital transformation of value. We must look at the psychological anchor that keeps people in the stock market. It is the myth of the 7%. For decades, we've been told that if we just hold a diversified portfolio for 30 years, we will retire wealthy. This worked in an era of expanding empires and centralized control. But we are now in an era of network sovereignty. The value is no longer in the company. The value is in the protocol. In the legacy world, a company like Uber or Amazon captures the value and gives a tiny slice to the shareholders, while the executives take the lion's share. In the Web3 world, the protocol distributes the value to the participants, the people who actually provide the liquidity and the utility. Why would you buy a stock in a company that exploits you when you can own a piece of a protocol that empowers you? The stock market is a centralized permission system. The Web3 market is a decentralized autonomous system. In the stock market, your wealth can be deplatformed. We saw this with the GameStop saga, where the buy button was simply turned off because the legacy plumbing couldn't handle the pressure. That was a warning shot. In Web3, there's no off button. The liquidity is global, censorship-resistant, and entirely peer-to-peer. The final crash will occur when the collective consciousness realizes that safe stocks are actually the most dangerous assets you can own, because their value depends on the permission of a system that is increasingly desperate and insolvent. Look at the debt ceiling. Look at the constant printing of fiat currency. The stock market is currently a nominal illusion. The numbers go up because the value of the dollar goes down. It's not growth, it's inflation. But Web3 offers absolute scarcity. When you own a tokenized asset on a fixed supply ledger, you are not just protecting yourself from inflation. You are capturing the premium of truth. The market crash in Web3 isn't a disaster for the prepared. It is the great reset of the wealth gap. For the first time in human history, the individual has the same access to high-yield, institutional-grade assets as the billionaire. The gatekeepers are being bypassed by code. The transition from equity to token is as significant as the transition from barter to coinage. It changes the fundamental nature of how we perceive value. A stock is a claim on a future cash flow that may or may not happen, overseen by a board of directors you've never met. A token is a direct, mathematical share of a protocol's utility. One is a promise, the other is a proof. In a world of increasing uncertainty, the market will always choose proof over promise. This is why the stock market's days are numbered. It is a system built on subjective trust in a world that is moving toward objective verification. Let's talk about the infrastructure gap. Currently, there are millions of people who think they are safe because they have a 401k. But that 401k is tied to the survival of the legacy financial system. If the clearinghouse fails, or if the depository faces a systemic crisis, your ownership is just a line on a screen that nobody is obligated to honor. Web3 removes this gap. Your ownership is your private key. Not your keys, not your assets, will become the battle cry of the 2020s. The final crash will be the moment when the public realizes that their 401k is a liability and their digital wallet is their only asset. The final market crash in Web3 will be characterized by a zero-bid scenario for traditional stocks. As the tokenization of the economy reaches a critical mass, say, 20% of global GDP, the incentive to provide liquidity to the old world will vanish. Why would a market maker provide a bid for a slow-moving stock when they can earn 10x the yield providing liquidity to a decentralized exchange? They won't. The liquidity will dry up, the volatility will become unmanageable, and the blue-chip stocks will experience flash crashes that never recover. The value hasn't disappeared. It has simply changed its state from solid, paper, to gas, digital. This is why you must pivot your mindset now. Stop looking at the P/E ratios of dying companies and start looking at the total value locked in protocols. Stop worrying about what the Fed says and start worrying about what the smart contracts do. The power of the future isn't held in a skyscraper in Manhattan. It's held in the decentralized nodes of a global network. The stock market is a game of follow the leader. Web3 is a game of verify the code. In the end, the code always wins. The final crash is actually a grand opening. It is the moment when the walls between the financial elite and the global public finally crumble. But to enter this new world, you have to leave the old one behind. You have to stop buying into the paper illusion and start investing in the protocol reality. The risk isn't in Web3. The risk is in staying in a system that is designed to fail. The asteroid is already in the atmosphere. The stock market is the target. Web3 is the escape pod. The final market crash won't be a tragedy for those who understand the shift. It will be the single greatest opportunity for wealth creation in human history. It will be the moment when the invisible hand of the market finally gets a digital brain. We are moving from a chaotic, human-managed economy to a precise, code-governed economy. The final crash is just the sound of the old system's engine finally seizing up. So, ask yourself, when the screens on Wall Street go dark and the liquidity has migrated to the blockchain, what will you be holding? Will you be holding a piece of paper that says you own a beneficial interest in a ghost? Or will you be holding the private keys to a piece of the future? The choice is yours, but the clock is ticking. The liquidity migration has already begun. The final crash is scheduled. Stop buying stocks. Start owning the protocol. This is FutureFund. This is the end of the legacy lie. To truly grasp the magnitude of what is coming, we have to dismantle the concept of the public company. For the last century, becoming a public company was the pinnacle of success. It meant you had reached a level of maturity where you could invite the public to share in your profits. But in reality, being a public company in the legacy system means being a regulated entity. It means being subject to the whims of the SEC, the quarterly pressure of analysts, and the predatory behavior of high-frequency traders who use their proximity to the exchange to front-run your every move. The public is the last to know and the first to pay. In the Web3 era, we are seeing the rise of the autonomous protocol. A protocol doesn't have a PR firm. It doesn't have a diversity and inclusion board. It doesn't have a CEO who gets a $50 million bonus while the stock price flatlines. It has incentive alignment. The developers, the users, and the investors are all on the same side of the table. When the protocol succeeds, everyone who holds the token succeeds. This is hypercapitalism in its purest form. It is the removal of the parasitic middle layer that has drained the life out of the stock market for decades. The final crash will be the death of the parasitic executive. The legacy stock market relies on opacity. They want you to think it's complicated. They want you to believe that you need a financial advisor to tell you which index fund to buy. They thrive on the information asymmetry between the insiders and the retail bag holders. Web3 is radical transparency. You can see the treasury of a DAO in real time. You can see every trade, every mint, and every burn as it happens on the Block Explorer. There are no shadow books. There are no off-balance sheet liabilities. In a world where truth is the most valuable commodity, the opaque stock market is a short. The transparent protocol is a long. We must also consider the geopolitical decoupling. The stock market is inherently tied to the nation-state. When you buy a U.S. stock, you are betting on the stability of the U.S. government, the strength of the U.S. dollar, and the continued dominance of the U.S. military. But we are moving into a post-geographic world. Web3 doesn't care about borders. A protocol running on a decentralized network is immune to the sovereign risk of any single country. If a nation decides to tax its citizens into oblivion or freeze their bank accounts, the sovereign individual with a digital wallet remains untouched. The final crash will be the moment when sovereign debt and legacy equities are discarded in favor of network assets. The stock market is a closed loop. You can only buy stocks if you have a bank account, a social security number, and the permission of a broker. This excludes 4 billion people from the global economy. Web3 is an open loop. Anyone with an internet connection can participate. This is not just a moral argument. It is a liquidity argument. When 4 billion new participants enter a market that is fundamentally more efficient than the old one, the inflow of capital will be unlike anything we have ever seen. The final crash of the stock market will be the result of a global margin call on the excluded majority, who are finally invited to play a better game. The final crash will also be an infrastructural inversion. In the past, the alternative assets were the small, risky ones: crypto, venture capital, private equity. The mainstream assets were stocks and bonds. We are approaching the inversion point, where the protocol assets become the mainstream because they are the only ones with deep liquidity and instant settlement. The stock market will become the alternative, a niche, a liquid market for those who are too afraid or too slow to move to the code. It will be the vinyl record of finance, cool for collectors, but useless for the mass market. Let's talk about the Oracle problem and how it solves the audit problem. In the traditional stock market, we rely on auditors, like the Big Four, to tell us if a company is telling the truth. But auditors are human. They can be bribed, they can be lazy, and they can be wrong. Look at FTX. Look at Wirecard. Look at Bernie Madoff. The audits were all clean, until the money was gone. In Web3, we use oracles, decentralized data feeds that provide verifiable proof of off-chain facts. If a tokenized real estate DAO claims to own a building, the oracle proves it by linking to the digital deed and the property tax records on-chain. The audit is continuous, automatic, and incorruptible. The final crash will be the moment when the market realizes that a human audit is worth nothing compared to a cryptographic proof. The final crash will be a crisis of custody. In the old world, custody meant a vault with a big door. In the new world, custody means a multi-sig wallet with decentralized shards. The legacy financial system is currently facing a custody nightmare. They don't know how to hold digital assets without creating the same centralized risks they've always had. But the sovereign individual already knows the answer. The final crash will be the moment when the institutional custodians realize they are redundant, and the public realizes that they are their own best guardian. The final market crash is also the death of the broker. For centuries, the broker has been the gatekeeper. They charged you a commission to do something that should be free. They managed your money by putting it into funds that they owned. They were the rent seekers of the financial world. In Web3, the smart contract is the broker. It doesn't charge a commission. It doesn't have a conflict of interest. It doesn't try to sell you a product you don't need. It simply executes your command. The final crash is the sound of millions of middlemen finally losing their economic rent. The stock market is a historical artifact. It belongs in a museum next to the telegraph and the steam engine. It served its purpose in the industrial age, but it is a friction point in the information age. We are moving toward a frictionless economy. An economy where value moves at the speed of light, where ownership is absolute, and where the market is a global, autonomous organism. The final crash is just the friction finally overcoming the machine. This is why the final crash is inevitable. It is not a matter of if, but when. The technological gravity of Web3 is too strong for the legacy system to resist. Trillions of dollars of analog capital are about to be converted into digital capital. And in that conversion, the analog market will be left behind as a hollow shell. The S&P 500 will become the S&P 0 in terms of relative value against the protocol economy. The final crash is the great filter of the financial world. It will separate those who are locked into the past from those who are programmed for the future. The locked will lose their purchasing power as the fiat currency collapses and the legacy stocks become illiquid. The programmed will capture the greatest wealth transfer in the history of our species. They will be the founding fathers of the digital nation. So I repeat, stop buying stocks. The final market crash is not a market event. It is a systemic migration. It is the moment when the software of the world finally eats the finance of the world. The legacy system is read-only. You can watch it, but you can't change it. Web3 is read-write-own. You can participate, you can build, and you can capture the value. The final crash is the final warning. The exit doors are still open, but the queue is getting longer every day. The smart money is already through the door. The institutional money is pushing its way in. The retail investor is still sitting in the theater, watching the movie, unaware that the building is being replaced by a virtual simulation. Don't be the last one in the theater. The final market crash in Web3 is the birth of the sovereign economy. It is an economy where the individual is the institution, where the code is the constitution, and where the market is absolute truth. This is the future that the establishment is terrified of. This is the future that HistoFund warned you about as a collapse. But at FutureFund, we don't see it as a collapse. We see it as an upgrade. We see it as the moment when the human error is finally removed from the financial equation. When the greed of the banker is replaced by the logic of the contract. When the inefficiency of the empire is replaced by the velocity of the network. The final crash is the Great Liberation. But liberation requires preparation. It requires digital literacy. It requires the courage to opt out of a system that is comfortable but dying, and opt in to a system that is complex but living. It requires you to stop being a consumer of finance and start being a programmer of wealth. The final market crash is coming to a Web3 wallet near you. It will be televised, but it won't be understood by the commentators on CNBC. They will call it a bubble. They will call it anarchy. They will call it a crisis. But those who are on-chain will know the truth. It is the sound of the old world finally letting go. It is the sound of the final market crash. The final crash is the final act of the analog era. The curtain is falling on Wall Street. The lights are coming up on the global ledger. The audience is leaving the theater of debt and entering the arena of ownership. The final crash is the beginning of the real game. So, put down the stock app. Pick up the digital wallet. Stop chasing the ticker symbol. Start studying the protocol white paper. The value is no longer in the brand. The value is in the bootstrap. The final market crash is your invitation. Welcome to the autonomous era. Welcome to the post-stock world. Welcome to the final market crash. This is FutureFund. We don't look back at the empires that failed. We look forward to the protocols that cannot fail. The final crash is here. Are you on-chain or are you off-ledger? The code is waiting for your transaction. The final crash is also the death of the quarter. In the legacy system, we are obsessed with the quarterly earnings report. It is a short-term, artificial metric that forces companies to cannibalize their future for a beat in the present. In Web3, the metric is network effects. The goal is not a profit this quarter. The goal is ubiquity forever. A protocol like Ethereum doesn't care about its earnings in the traditional sense. It cares about its utility and its security. As the protocol grows, the value of the network grows exponentially. This is Metcalfe's law applied to finance. The final crash will be the moment when the exponential growth of Web3 protocols completely dwarfs the linear growth of traditional stocks. The legacy market is a finite game. It is a game played to win, to take money from someone else. Web3 is an infinite game. It is a game played to keep playing, to expand the network and create new value. When a finite game meets an infinite game, the infinite game always wins because it can't be beaten. It can only be joined. The final crash is the sound of the finite game finally running out of players. The final crash will be the great unbanking. For centuries, the bank has been the central point of control. They decided who could have money and what they could do with it. But in the Web3 world, the bank is an app on your phone. The bank is a smart contract in the cloud. The bank is you. The final crash will be the moment when the bank run becomes a bank exodus. When the billions of people who were unbanked by the old system become the self-banked leaders of the new system. The stock market is a ghost ship. It looks impressive from a distance, but there is no one at the wheel. It is being driven by algorithms that are programmed to follow past patterns in a world that is breaking the pattern. Web3 is a living organism. It is being driven by the collective intelligence of millions of people who are coding the future in real time. The final crash is the moment when the ghost ship finally hits the iceberg of reality. The final market crash is the final chapter of the HistoFund narrative. It is the moment when the historical cycle of empire and collapse is finally broken by the technological shift to decentralized sovereignty. We are no longer subjects of history. We are programmers of reality. The final crash is our Independence Day. So, I ask you one last time, why are you still buying stocks? Why are you still betting on the legacy empire when the protocol nation is already here? The final market crash is the great filter. It is the moment of truth. It is the final divide. The final crash is not a fear. It is a certainty. It is the mathematical conclusion of the information revolution. The final crash is the end of the beginning, and the beginning of the end for those who refuse to see. The final market crash in Web3. It's not a disaster. It's a delivery. It's the delivery of the financial system that we were always promised, but were always denied. A system that is fair, fast, free, and forever. The final crash is the sound of the future finally arriving. It is the sound of FutureFund. Stop buying stocks. Start owning the future. The final crash is your new beginning. The ledger is open. The block is waiting. Confirm the transaction. Enter the future. The final market crash is the start of your sovereign life. Welcome to the final market. Welcome to Web3. Welcome to the end of the stock market lie. This is the final word. This is FutureFund.